Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is rejecting to the upside a quite strong historical monthly support and demand area. In fact, what we know is that from here, all these previous rejections to the downside were created. So for actually more than 2 years, the market respected this area as resistance. Then, just a few months ago, we had the break above the zone. And at that point, all this previous resistance after the break on the retest of the previous resistance was turned support. Because what we know is that in the market, when there is a strong level that is acting as resistance, and has been acting as resistance in multiple occasions, after the market breaks it to the upside, all that previous resistance is then turned support. And on the retest of the previous resistance turned support, that is when there is a good probability to see a potential rejection to the upside away from the zone. So here on the monthly time frame, everything seems quite bullish. What we can also notice is that now we had another very strong impulse to the upside, and now the market is following through with a correction, which is a very healthy thing in an uptrend. In fact, when we have the creation of an uptrend, you can never expect the market to just go straight up in a straight line, because at every point when you see such a move, so only pushing straight up, at some point the market will become overextended to the upside and in need of that correction, because every healthy uptrend is composed by a series of impulses and corrections, which constitute the creation of the higher highs and higher lows, which are the definition of an uptrend itself. Because these corrections give the possibility for new buyers to enter into the market and push the price higher, therefore printing the higher highs and higher lows. So what we can see here on the monthly is a very classical example of a very strong impulse to the upside, followed by a correction, after which there is definitely the possibility to see potentially more bullish continuation. However, what we have to notice is that since we have an impulse, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market hasn't yet retraced, not even to the 0.32 of the Fibonacci taken on the impulse leg, meaning that there is definitely the possibility to see a bit more bearish price action for the market to go and reach this level before then potentially continuing higher. Because even in a very strong uptrend, the market is supposed to create a correction at least to the 0.32. This is, at least in my experience, in most cases, what the market actually does, at least retraces to the 0.32 Fibonacci, and a lot of people will agree with me. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice how the market does have some resistance at this zone. In fact, we can see how the market first created this impulse to the upside, then created this correction, then created a new higher high, and then melted to the downside, breaking below this previous low. So this, simply put, is a level of previous support, which is now turned resistance. And since the market is testing previous support and resistance, there's a good probability of seeing a potential rejection to the downside away from this level. We can also notice that we do have at this level quite a strong structured zone. In fact, this was a previous level of a ranging for this market. We can easily notice, in fact, how inside of these two levels, the market was forming a range in the past. We can see how this was here at the high acting as resistance, here at the bottom acting as support, and the market was trapped in between these two levels. Then, with this green candle here, the market broke above the range, and after the break on the retest of the previous resistance turn support, this push to the upside started. Usually the market likes to retrace back to previous levels of ranging to see what kind of liquidity there is inside of here. But at least at the moment, the market is still too far from this level to really start planning on something like this. So I just wanted to show you that there is some ranging happening in the past around that area, which could be a magnet for this price, in my opinion. Now, dropping down the daily time frame, what do we have? Well, from a daily perspective, what we can notice is that, first of all, the market was overextended to the downside. In fact, I did speak about gold just a few days ago when the market was here, and I explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, at the moment, what do we have, and what kind of structure the market has been creating so far? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold. Now, what we can see here is that with the very last reports, net positions have been decreased. We went from having 296.2k net positions, slightly decreased to 278k, then to 255k, now to 236k. So even though in the long term, gold is still very strong, in the very short term, we are seeing some profit taking from an institutional perspective on the longs, therefore making gold weaker from an institutional perspective, with net positions getting decreased. In fact, longs got decreased from 387k all the way down to 316k from an institutional perspective, showing some profit taking on the longs that essentially they were building up before the huge push to the upside that we have just experienced on gold from a monthly standpoint. Now, profit taking simply means positions which are removed from the long side, which makes gold weaker. So increases the probabilities of a potential push lower, which is already what we wanted to see by looking at the monthly time frame, a deeper correction. So let's keep all of this in mind and move back to the chart. Now, by the way, if you still haven't, make sure to join my free Telegram channel. You find it linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, this level is now previous daily support from which this push to the upside was created. The market has now broken below the zone, so that previous support is now turned resistance. Now, as the market is testing this previous support and resistance, there is an increased probability of seeing a potential rejection to the downside away from this level. We can also notice that as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the high to the low of the impulse leg, which shows us how we have a 0.618 Fibonacci retracement lining up exactly at this area, which is also previous support and resistance, therefore creating confluence of resistance at this zone from which there is an increased probability of seeing a potential rejection to the downside, because when there is confluence of support, there is also the possibility of seeing some institutional shorting inside of that zone, further increasing the probabilities of a potential push lower. So inside of this area, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside away from this confluence of resistance area. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.